Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we are taking a careful and professional look at a circulating claim involving bond activity, reported funding of paymasters, and the suggestion that distributions may be scheduled within a very short time frame. These kinds of reports often generate significant attention within the Iraqi dinar community, particularly because they are sometimes linked, directly or indirectly, to expectations around currency valuation changes. As always, our goal here is to separate verifiable economic realities from speculation, and to explain what these claims could mean in both the short term and the long term. The core of the claim suggests that certain bond-related contacts are expressing strong optimism, even describing themselves as ecstatic, following meetings that reportedly took place recently. According to the statement, paymasters and attorneys responsible for handling bond redemptions have allegedly been funded but were instructed to delay distributions until a specific week. The implication here is that a coordinated release of funds may be imminent. This is followed by a key question often raised in these discussions: whether a currency rate must be revealed before bonds can be paid, and whether bond payments could precede any change or announcement related to currency valuation. To properly analyze this, we need to step back and understand how sovereign bonds, redemption processes, and currency valuation actually function within a real financial system. Bonds, whether they are government-issued or part of legacy financial instruments, are typically governed by contractual agreements that specify payment terms, maturity dates, and redemption conditions. These agreements are not usually dependent on sudden currency revaluations or secret rate announcements. Instead, they are tied to fiscal policy, government budgets, and institutional financial operations. When claims arise suggesting that paymasters have been funded, it is important to recognize that in legitimate financial systems, funding allocations for bond payments are usually part of transparent processes involving central banks, ministries of finance, and regulated financial institutions. These processes are documented, audited, and often publicly reported, especially when they involve large-scale disbursements. The idea that distributions would be delayed due to undisclosed instructions, without any formal announcement or documentation, raises questions about the reliability and verifiability of such claims. Another key point to address is the relationship, or lack thereof, between bond redemptions and currency exchange rates. The statement implies that bond payments could occur independently of currency rate disclosures, while currency exchanges would require known rates. This distinction is partially accurate in a technical sense. Bond payments are typically made in the currency specified in the bond contract, and those payments do not require a change in the currency's international exchange rate. In contrast, currency exchange transactions do depend on published rates within global financial markets. However, the leap from this technical distinction to the idea that bond payments would trigger or precede a major currency revaluation is not supported by standard economic practice. Currency values are influenced by a wide range of macroeconomic factors, including inflation, interest rates, foreign reserves, trade balances, and overall economic stability. They are not usually adjusted as a byproduct of bond redemption cycles, especially not in a sudden or secretive manner. In the context of Iraq's economy, it is essential to consider the role of monetary policy and the central bank. Any adjustment to that value of the Iraqi dinar would be a significant policy decision, likely involving coordination between the central bank, the government, and international financial institutions. Such a move would have wide-reaching implications for trade, investment, and domestic economic stability. It would not be implemented quietly or indirectly through unrelated financial channels. Short-term implications of rumors like these often include increased speculation within the dinar community. Some individuals may interpret these claims as signals of imminent change and may adjust their expectations accordingly. This can lead to heightened emotional responses, including excitement or urgency. From a financial perspective, however, it is important to remain grounded in verifiable information. Acting on unconfirmed reports can expose individuals to unnecessary risk, particularly if decisions are made based on assumptions rather than facts. In the longer term, repeated cycles of similar rumors can have a broader impact on how information is perceived within the community. When claims about imminent events do not materialize, it can lead to confusion and skepticism. This underscores the importance of relying on credible sources, official statements, and established economic indicators when evaluating developments related to the Iraqi dinar. It is also worth noting that the language used in these claims, such as references to ecstatic contacts or specific instructions, tends to be anecdotal rather than evidence-based. In professional financial analysis, anecdotal reports are treated with caution, especially when they cannot be independently verified. While they may reflect genuine beliefs or experiences, they do not carry the same weight as documented data or official announcements. Another aspect to consider is the concept of timing. The claim suggests that distributions are scheduled for a specific week, implying a coordinated timeline. In reality, large-scale financial operations, particularly those involving international or sovereign instruments, are subject to complex logistical, regulatory, and compliance requirements. These processes rarely align with precise short-term timelines that are not publicly communicated. Delays, adjustments, and procedural requirements are common, making it unlikely that such events would unfold exactly as described in speculative reports. From a broader economic perspective, Iraq has been working on various reforms aimed at strengthening its financial system, diversifying its economy, and improving fiscal stability. These efforts include enhancing banking infrastructure, increasing transparency, and managing public finances more effectively. While these developments are positive and may contribute to long-term economic growth, they do not necessarily indicate an imminent or dramatic change in currency value. For followers of the Iraqi dinar, the key takeaway is the importance of distinguishing between speculation and substantiated information. Bond-related discussions, especially those lacking official confirmation, should not be interpreted as direct indicators of currency revaluation. Instead, attention should be focused on measurable economic indicators, policy announcements, and credible financial reporting. In the short term, it is reasonable to expect continued discussion and speculation around these topics, particularly as new claims emerge. However, without supporting evidence from authoritative sources, such claims should be viewed as unverified. Maintaining a balanced perspective helps avoid overreaction and supports more informed decision-making. Looking ahead, the long-term outlook for the Iraqi economy will depend on structural reforms, political stability, and global economic conditions. Currency valuation, as part of this broader picture, will be influenced by these factors rather than isolated events or unconfirmed reports. Progress in areas such as oil revenue management, non-oil sector development, and financial sector modernization will play a more significant role in shaping the future of the dinar. It is also important to address the question raised in the claim about whether a rate would be revealed after bonds are paid. In practical terms, currency exchange rates are not revealed in a sequential or secretive manner tied to unrelated financial events. They are determined through market mechanisms and policy decisions, and they are published through official channels. Any change in rate would be communicated clearly to ensure stability and transparency within the financial system. The idea of a hidden or delayed rate announcement following bond payments does not align with how modern financial systems operate. Transparency is a critical component of monetary policy, particularly in a globalized economy, where investor confidence and market stability depend on clear and consistent communication. As we continue to monitor developments, It is essential to approach each new claim with a critical mindset. Asking questions about sources, evidence, and plausibility helps filter out misinformation and focus on what truly matters. This approach not only supports better understanding, but also contributes to a more informed and responsible community. In summary, while the reported bond activity and funding claims may sound encouraging on the surface, they lack the verification and context needed to draw meaningful conclusions about the Iraqi dinar. The relationship between bond payments and currency valuation is not as direct as suggested, and there is no clear evidence that such events would trigger or precede a change in exchange rates. Short-term reactions should be tempered with caution, and long-term expectations should be grounded in economic fundamentals. Thank you for watching Iraqi Dinar News. If you want to stay updated with responsible, factual, and professional analysis, make sure to subscribe to the channel and like the video. This content is provided for informational purposes only and should not be considered financial advice.